Happy Friday out there, folks. It's your skipper, Darius Dale, here to present our macro minute for Friday, June 3rd, 2022. Starting with asset markets, we have stocks down this morning, commodities mixed with crude oil leading, crypto down, dollar up, global bond yields up. Market moving headlines, you have the Fed failing on one of its core objectives as employers added 390,000 positions in May in terms of the non-farm payrolls. That's slightly down from a upwardly revised 436,000 in the prior month. Suggests companies remain very confident about demand and the prospects for the economy. The unemployment rate was steady at 3.6%. Shifting gears, I think investors, we continue to talk about this on this program and obviously doing deep dives in it in our research here at 42 Macro. But we think investors need to beware of a profit cycle downturn. Obviously, Elon Musk runs one of the world's biggest companies, at least in market cap terms. He sent the email to his workforce, to his executives, that Tesla needs to cut its workforce by about 10% and pause hiring worldwide. Again, this is one company. We don't want to make too much of it, but it's certainly in the direction of what we anticipate from a sharper growth slowdown that we're likely to experience throughout the second half of this year and into the early part of next year. Coinbase said it would extend a hiring freeze for both new and existing positions, and also rescinded a number of accepted offers. That's a problem moving the wrong direction. And so one thing we'll talk about, one thing we need to reiterate here, when you talk about the financial tightening that we've observed thus far, when you look at real interest rates, look at corporate borrowing costs, look at mortgage rates, it doesn't impact the whole economy at the same time. Borrower A is not the same as borrower B in terms of its debt service and ability to take on incremental debt or its ability to refinance debt. So you're going to see it dry up. Liquidity always dries up at the margins first, and eventually it comes home to roost in the larger companies, in the larger segments of the economy. And so I think these data points are instructive in that regard to understand that cycle, that process. It is a process. Lastly, inflation is unlikely to magically disappear. South Korea joined the Eurozone in having inflation outpace estimates again, accelerating to 5.4% year over year in May. These are May figures, the highest since August 2008. Consensus was calling for a 5.1% increase. The BOK, the Bank of Korea, signaled that it expects inflation to remain in the sort of 5% range over the next couple of months. This is something we talked about. The inflation continues to accelerate all across the developed world. And there's this narrative around U.S. inflation that it's peaked. And, we don't disagree with that, particularly from a headline perspective. But again, when you analyze the drivers of core inflation, we're very much at a risk of seeing a services sector inflation wrestle the baton away from goods disinflation and actually cause a pause in the disinflation in the statistics like core PC, et cetera. Again, that's not our base case scenario, but I do believe that is a legitimate risk that has been very, very poorly priced by the market at these prices and at these levels. Big movers today. NASDAQ 100 index down 1%, down to roughly 3% month over month. Bitcoin down 2% this morning to down 22% month over month. Ethereum down 4% this morning to down 37% month over month. Some fantastic sales there in early April after we bought the dip. In March, some nice little trade. We do a nice little day trading sometimes, here. But the real call we made on crypto dates back to December 10th when we took down all of our exposure to the digital assets ecosystem, to the space. And that was obviously a really great call considering how far down we are from those prices. And again, I'm not a genius or anything about crypto. I'm certainly not don't have any real models for on-chain analytics, et cetera, et cetera. Our work is off-chain. We understand the global macro cycles, the growth cycle, the inflation cycle, the liquidity cycle, the profit cycle, the positioning cycle. That's what we specialize in. That helps us add value to crypto investor portfolios. So we're grateful for that. I'm grateful for the hard work myself and my team are doing it to add value to our clients. Haven't had too much value in the last couple of weeks, obviously getting squeezed here in the stock market, but it is what it is. We expect lower prices over the medium term. Shifting gears to our volatility adjusted momentum signal and probable range. The probable range is U.S. dollar still bullish, still at the lower boundary of its probable range with 2.1% upside to the upper boundary. Gold still bearish, fams, at the upper boundary. It's probable range, 4% downside. That's a short there, right there. I mean, if you want to search something that's breaking down, this would be the spot on gold. We're not saying to go do that, but certainly this would be the spot if you want to go do that. 10-year nominal treasury or bullish, fam, still in the middle of the probable range here, minus 15 basis points or 18 basis points of downside, 15 basis points of upside. High yield OAS still at the lower boundary of its probable range with 70 basis points of upside. S&P 500, that is still bearish, fam, still at the upper bound of its probable range with 9% of downside. VIX, neutral VAMs, still somewhat in the middle of its probable range, only 12% of downside versus 28% of upside here. NASDAQ, bearish fam, still at the upper bound of its probable range with 12% of downside. Russell 2000, bearish fam, still at the upper bound of its probable range with 11% of downside. Bitcoin, bearish fams, 4% of upside, 11% of downside. Ethereum, bearish fams, 9% of downside, 13% of upside. Shanghai Composite, neutral VAMs. This thing really wants to break out the bullish. As you know, when it turns bullish, we'll get a positive skew in the probable range distribution, but it still might not be enough. This thing wants to go higher. Neutral VAMs at the upper bound of its probable range with 4.8% of downside. WTI crude oil, bullish VAMs. Still in the middle of its probable range with 7% downside and upside apiece. And then agricultural, neutral VAMs. Bounced off the lower boundary of its probable range with 6.6% upside to the upper boundary. Industrial metals, bearish fams, still at the upper boundary of its probable range with 6% of downside. So with that, Darius Dale presenting our macro minute for Friday, June 3rd, 2022. Best of luck out there this week and have a wonderful weekend. We'll catch you back here on Monday. Cheers.